All right. Good morning or afternoon, rather. Good afternoon, Simpler family. Hope you're doing well on this Friday, April the 4th. Another down day in the stock market. Good afternoon, Mirza and Omer. Hello, John and Marco. Good to see all of you in here in the Essentials room. Jim, Frisco, good to see you. Good afternoon. Yeah, so today, what did I want to talk about? Scalp trading, especially in this current market environment. I believe if you are looking for a trading strategy that you don't need to carry risk overnight when you really can't do anything about your positions, of course, unless they're futures, which is traded 23 hours a day. But for most things, there's no way to manage our risk if we carry it overnight. And so scalp trading is an option, in my opinion, especially in the current market environment where we are seeing extreme volatility. I believe the VIX was up to 40 today. That measures the volatility in the market, and second consecutive day down over 200 points in the ES. Just crazy, wild price action. So, no better time than now to talk about how I scalp trade. Now, the important thing is this: every trade that I take, whether I intend to be in the trade for 30 seconds or 30 days or 3 years, I must have a trade plan before I get into the trade. I think that is vital. Right now on my screen, I am sharing an SPY chart, and it is a 5-minute chart. Now, I will go down to a smaller time frame here in a second, but if I am looking at this chart, the only thing, I have nothing manually drawn on here right now. The only thing on my screen is my trusty PMZ indicator, stands for pre-market zone. This is the indicator that I use for day trading, and the PMZ is very simple. If price is below the PMZ, then we're looking to go short. And if the price is above PMZ, we're looking to go long. And we can play relief bounces to the upside from levels if we want to buy calls, in this case in SPY, or buy equity in SPY down below the PMZ. I treat this as a scalp type trade, and I would want to trim my position very quickly because price is below the PMZ and the trend for today is bearish. Meaning, if I'm buying calls or buying equity down here, that is counter trend, and I would take more of a scalp approach to that type of trade. So let's first set up some levels that I see on the chart that would be potential areas of entry and or potential areas to take profits on a scalp trade. So first level that I want to note on the screen is the low of the day right here at 5:10:05. And then I also want to note the high of the day up here at 5:24:49. Now, of course, the bottom of my PMZ and the top of my PMZ are levels. I don't need to put a manually drawn line here because I have the indicator. All right. Now, what do I note? I know that today we are in a bearish trend. I want to look at the price action here on the chart, and I can see we got a quick pop on the open, and then a very fast flush of $14 to the downside before we recovered and went up, making a lower high here at this topping wick at about 522.59. And then on this candle, a downward trend began again. So on this first candle that downtrend began, I want to use the Fibonacci retracement tool to draw to measure that move down. Okay. And this is important because in scalp trading, these are going to give me levels to take profit. All right. Now, since the trend is bearish, if I were to take a trade from the low of the day here at 510.05, then I want to trim that position at or near the 236 retracement. So I'm going to go ahead and draw my fibs in anticipation that price comes down to or near the low of the day. That means in this plan of buying calls or going long at the low of the day. So I'm just going to make a note so that we all can see what the plan would be is to buy a call here. And I automatically know that my trim or take profit level on a scalp is 512.69. So this is where I would cover my long position. All right. I'm just going to write cover here. Everybody following along so far? So now I want to look at my reward, which is 512.69 minus 510.05, $2.64. As far as the risk goes, you can answer this question with what you're comfortable with. Let's say that you like a 1-1 risk to reward. Then you would want your stop to be approximately $2.50 below where you went long, right? So down here around 570.58, this would be the stop if you like a 1-for-1 reward. If you would rather have a 1-for-2 reward, then you could set a $1.25 stop below and use 508.81 as your stop. Everybody follow? This is a personal question that you need to ask yourself. I know where reward is at based on this Fibonacci level, what we call the bear channel. And so if I want a 1-for-1, I would use this as my stop. If I want a 2-for-1, I would use this level as my stop. All right. The important thing is this, that even if you're scalp trading, make sure that you have a trade plan before price gets to the level. You don't have to write it out on your screen. I'm just doing this for teaching purposes, but you need to know where your level is at. Now, one thing I want to teach you is the importance of on scalp trading, especially smaller time frame charts. It's important to have your order in ahead of time or be very quick on the draw to get your bid in when your alert goes off. So whether you would rather set an alert here or have your order in ahead of time, of course, is up to you. I'm going to show you how I would place an order to buy a 510 call on SPY here for today's expiration because we are scalp trading. There's no need for me to buy a lot of extra time, right? So if I go to the trade tab, and I'm wanting to go long at the low of the day, 510.05. I come in here, today's expiration, because I am simply just scalp trade this. So I go to the calls because I want to go long at the low of the day. I click on the ask column here, and I know that my trigger is 510.05. So what I want to do is look at the expected SPY price here and adjust the cost of the option here. 510.05, you can see as I adjust the cost of the option down, that expected SPY price also goes down. All right. So 510.05 is what I want that expected SPY price to look like. And when there's a lot of volatility and fluctuate a lot. So I like the 290. I've seen 510.05 come up here several times. So 290 would be my bid. All right. So if I go down here, and check your chart to make sure 510.05, right? And I hit confirm and send. All right. My bid will be setting here ahead of time that if price comes down to the low of the day, I will get executed on this trade. Now, my cover price 512.69. I want to talk about an EMA cloud. As price has fallen below this EMA cloud, the trendy cloud here, you can see that it has been resistance. And as price continues to fall and that cloud continues to fall, and it is resistance, you can, being conservative, use this cloud as your cover. So let's go ahead and put her to cover at the cloud at 511.80. Now I am in this trade. I'm now going to right click and go to the sell, and that was 511.80. I will adjust the price up, right? 511 to until the expected price gets to or near 511.80. All right. And it's fluctuating a lot, but there, let's just do 375 because I like that number. All right. So now, because I'm scalp trading this, you can see where my bid would be filled, which is at that 5-minute cloud. Now, I am good with a one-to-one risk to reward. This would be a 2-for-1 risk to reward, a 1-for-1 risk to reward. You need to ask yourself which one. That's where you want to put an alert that if price stops you out before it makes it to your target, that you get out of the trade there rather than waiting for, I don't know, it to go to 0. So if once it alerts here and I'm on this 5-minute chart, I'm looking to see if a 5-minute candle closes below 507.58. If it does, then I want to stop out of the trade. I will cancel this order first by hitting the X right here. that will cancel that order. And then I just go in to the trade and exit at whatever price it's at on a 5-minute candle close below my stop. Any questions with that? All right. So now we're going to move our fibs down because we've made a lower low. But you can see my cover order is still in line with the cloud and very close to what is the 236 now. All right. So just like I did a call, right? I went long off of the low of the day. I have my alert at my stop. I have my cover order already in advance at this EMA cloud just above the 236. I can set up an order for the downside as well. Okay. If I wanted to, because I would be covering here, if I wanted to set up an order to the downside, once I cover my order to the upside, I could use this 236 as my area or the 5-minute cloud to go short and have my put order in advance. All right. So 5, 12, 23, or let's just say 512 would be that put. And premiums are very, very high today. It's not typical. This is not typical. So I would be buying a put here at 5 or near 512, right? On a pop to 5, it looks like 511.58. So that means for me, I would want to buy the 512 put when price gets to 511.58. So I'm just adjusting the cost of the option to the expected SPY price, 511.58. Or thereabouts. It doesn't have to be exact, but close for me. All right. So then I'm buying a put on a pop back up to this level here. All right. So now my put order is in. Once that fills, I know that I want to cover it at the low. And so if that order gets filled, then I put in my cover order in advance. Now, this call may get stopped out here if we get below the 507.58 and we get a 5-minute candle close below there, then I would stop out. You can use this method on whatever time frame chart you like to trade. So if you like trading 3-minute charts, right? You can use a 3-minute chart as well. You simply, right? Just use the levels that you see, which would now, let me start a new chart. Now be the low of the day. Here is your potential short. Here's your potential long. So you're wanting to close, or you would close your long at this 3-minute EMA cloud, or use to go short on a pop up on this 3-minute time, or use the Fibonacci levels of the 236 or the 382 to get short. The important thing about scalp trading is this: have those orders in, especially your cover orders. Have them in ahead of time. Even if you don't want to buy or set your entry orders ahead of time, it is very important for me to have my cover orders in ahead of time. Okay? Any questions or any charts y'all would like to look at and see how I would map out a trade plan for a scalp? Hannah, how do you decide where to place your fibs? Well, it depends, number one, on the amount of time left in the day. So if I was looking, and I'm going to remove that put, okay? If I was looking to scalp and we only had 30 minutes left in the market, I would not use this entire range. I would pick a shorter range, whether you went back an hour, probably twice the amount of time that you have left in the market. So you would draw your fibs on a shorter time frame, right? Let me see here. Let's remove that. So say there was only 30 minutes left in the market. I'm going to use this range because I don't have as much time left to be in the trade. I want to use that smaller range. Does that make sense? What I try to do is use the range about twice as long as the amount of time I have left before the market closes. You're welcome. You're welcome. Anybody else have a question or have a symbol that you would like to take a look at before my time is up here? I think it's important to note that as you're scalping and as price comes into levels or as your immediate resistance changes, you need to adjust what your expectations are. So I like this candle structure right here. Let me get it where you can see it better. I like this candle structure right here. I currently like where my bid is at. Although the 5-minute cloud could be a problem for me, I could adjust this to 511.17 and take a smaller profit here because that cloud has fallen lower than what it was, right? And let me just make sure before I do that, that that would be yes. So I can adjust my profit target to match what my immediate resistance now is. Y'all understand? Scalp trading means not for me. Scalp trading means not to be greedy with my profits, but rather several many quick profit taking opportunities as price gets up to a resistance level. I want to take my profits there. All right. Yeah, we can take a look at gold, and I'm gonna change this real quick just simply because if I'm not looking at it, I'm not comfortable having a scalp type trade on, and I just saw that that jacked way up. So I'm gonna get out of this scalp here. All right, and I'm out. So let's take a look at GC. GC, and I'm going to take all of my drawings and we can take a look and tell you how I would scalp GC. It's also, right, in a bearish trend. So here's your PMZ, 5-minute chart, PMZ, prices below it. If you want to scalp GC from to the downside, then it would be a sell here at the 5-minute cloud and the top of the 5-minute cloud if price got above it. If you're using the cloud to scalp off of, you would want to sell GC at 30.43, and then your stop would be a 5-minute candle close above the cloud. If you want to use the low of the day as a level to go long from, then of course the cloud is your immediate resistance and where you would take your profits. So that would be about what, $9 or so, or 9 points, right, to the upside from the low of the day going long, and your immediate resistance or whatever indicators you use on your chart, find that immediate resistance. That is your scalp target. Okay. So for a short, the immediate resistance would be your entry. For a long, you have to find a level that you use. I like using a low of the day. I like using a high of the day. I, of course, will use my trendy edges here. It just really depends on what indicators you have on your chart or what type of strategy you're trading. But from a supply and demand perspective and trendy trading methodology, I'm going to use the fact that at the low of the day, we made a 5-minute inside and up candle formation. So this is a buy the dip area for me. From the opposite side, we made an inside and down candle formation right about here. So if you didn't want to use the cloud as your entry, you could use this 30.49 as your entry, and then you are taking your profits at 30.34. All right. And then we can also look at CL, but I would scalp it the same way. The important thing, Hannah, is to know where your entry is and where your take profit target is at, and know those ahead of time and go ahead and put your bids in ahead of time if you're comfortable with that. So because CL is above the PMZ, a pullback to this PMZ would be a trigger long for me. And then my immediate resistance, of course, is this cloud. Or you could use this 5-minute inside and down formation. Whether you use the cloud or you use that higher target is up to you. But I tend to be more conservative on my scalping because I anticipate being in and out of trades very, very quickly. I'm okay with a few points to the for profits and then re-engage or take the reverse of my initial, right? If this is resistance, then you can also go short from resistance, right? Back down to where your original entry was. And you can literally scalp off of these two levels multiple times until, of course, you're finally stopped out on one side or the other. All right. So, to recap, the important thing for me to get across to you is that even for a scalp trade, you need to have a plan knowing your entry, your target, and your stop, where you will stop out of the trade, and then execute according to your plan over and over. And the more trades you take, even if it is for small profits, those small profits add up. Okay? All right. That's my time with you today. Thank you, as always, for being awesome and a part of the Simpler family. We appreciate you. I hope you have a wonderful weekend, and I look forward to seeing you again next week. Much love.